Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Tuesday the 7th of May 2013. Well, it's been a fairly quiet start to the morning, but there have been some notable standout performers. The first one is the DAX, so that's the German stock index. It's made another all-time high today. That comes after an intraday high yesterday. So it's currently testing around about that 8170 level. But there's been some interesting movement in stocks of late. On the one hand, we've had stock markets push higher, but we've seen the relationship between, or the inverse relationship between stocks and treasury yields. Remember, this is the yield on government debt, actually move inverse, actually move together. So breaking down that inverse relationship. Let's take a quick look here at the chart. So we've seen treasury yields really move higher. I mean, they're up the best part of 15 basis points since Friday, since that better than expected payrolls number out of the US. And yet we've seen stock markets, that includes the DAX and the S&P, which is included in that chart, also push higher. That's not what usually happens. So does something have to give? Does the rise in treasury yields, they're currently testing above the 200-day moving average, around about that 175 level. Does that mean that stocks can continue to move higher, even if treasury yields continue to move higher? Well, we will have to see, but this is certainly something to watch and could make investors rather cautious as we break this all new time ground. Yes, we may be breaking fresh all-time highs, but it might be a bit of a sweat for some of the investors and the traders who are involved in that push higher, because there could be a bit of caution coming in as people start to look at the bond market, and rising yields traditionally are bad news for stocks. Now, the other big move today has been the Swissy, so it's down across the board. Let's take a quick look at this. This is the daily Ichimoku cloud at 94.40. That is a level to watch. Top of the daily cloud. If we get above there, it's a very bullish development, gets us to 95.10, then 95.70. That was the high from mid-March. Why are we looking at why is the Swissy pushing forward? Well, there isn't really any fundamental reasons for it. It seems much more to be about momentum. There has been a bit of chatter in the markets that there's a lot of demand for 1 month options in Euro Swissy with a strike price of 125. Well, we're currently 123. So that could be adding to the upward pressure on Euro Swissy, the downward pressure on the Swiss franc, which is helping dollar Swissy push through this critical level. But if we can get above 94.40, that is a bullish development for this cross. So do watch out for that level. And that's where the action is today. We obviously also have, once the US comes in, not too much in the way of economic data out today. So we'll be focusing on that dollar Swissy and also those treasury yields to see where they go next. But thanks all for joining and good luck trading today.